Good morning. Do you ever find yourself trading on a hot streak for some time, and even though you've been trading well and you can say, oh, I could have traded better today, but I still ended green. And then you get to a day, maybe it's a Monday or maybe it's a Friday, or maybe you're close to a payout, or maybe you're close to completing an eval, and you just feel suddenly very nervous. Maybe it's the pre-market and what it's doing. Maybe it's odd volatility. Maybe you feel like you're just not able to read the market. Maybe the best thing to do is to not trade those days. But for me, I have always found that showing up on those days is far more powerful than walking away from them, because primarily it's just psychological. The market just goes up, down, or sideways every day. Now, it doesn't mean that you have to jump into every trade. It doesn't mean you even have to take a trade, but showing up to the markets when you feel most nervous and being extra patient and extra careful about your setups and entries, I think can yield good results even if you lose the trade, because you learn if you lose, and you'll gain both in learning and financially if you make money. Now, I'm looking at yesterday's day where I got beat up pretty well. When I saw, which I was not expecting, near 1,000 point move pre-market. Trump started talking about some decision making that was going to take place, and the market pops up. That gets me pretty nervous, because I look at that and I say, well, is this going to be a continued trend for the day? Or is there going to be a pullback, a sweep, and then we go back up? Is it going to consolidate for the day because it's already had a big move and no one really knows what direction it's going to go in? Is it going to tank, fall below, and keep going down? There's so many directions and there's so much movement. You have 1,000 points movement, and it should be exciting. It is exciting. But at the same time, it doesn't take but a handful of tens of points, and you can blow an account. Whether it's an eval, a performance account, or if it's a live account, God forbid, if it's actual cash money, if it's your personal account, I'm not even sure how you trade that yet. So the lesson for me is going all the way back to the simple word of patience. And patience is tough. If you feel like you're a momentum trader, you're trading the breakouts, you're looking for large moves as soon as you get in, well, oftentimes your stops are going to be near the extreme edges of what you can tolerate. If you're trading in queue and trading a full contract size in high volatility, 25 points is nothing. It'll wick 25, it'll wick 50 points on you, but that is a near intolerable amount of drawdown. So how do you get around that? Let's look at yesterday and look at some of the setups that I attempted to make and the difficulty I had, and where I should have played a much more patient game of trading, and I still would have taken some hits, but the setups still happen. So here we're looking at the hour. We're looking at this huge near, I think, 800 plus point move. Going into the open here, you can see bulls are still stepping up to the plate. We're thinking, prior to this candle, I'm thinking it's shorts all day long. We broke that macro trend that we've been talking about for days, a couple weeks on end. And now we're so far above the 50 EMA on the hour, and we're so bullish, shorts are out the window. And that's all that I talked about yesterday morning was, I'm just looking for shorts today. So I'm immediately long biased, which is great. That's where I should be. Now, looking at this hourly, it doesn't look so hot that you're just bullish. But when you break it down a little bit further, you'll see that generally speaking in the morning, you could not be bearish, right? Huge candle up, pull back right to the EMAs. Okay, it doesn't quite make a new higher high, but it doesn't make a lower low, and is still respecting the EMAs. We go back up again until we finally double top around 11. And at this time, I'm usually done for the day. Now at that point there was a sell-off, but nothing deep. Like we didn't have a mean reversion, we didn't have a fair value gap filled, none of that. It was just basically a kind of consolidated for the rest of the day. Now from here you're saying, okay, no problem, let's be bullish, but let's look at some of these large leaps in the amount of points that we're talking about. So at 10 o'clock here, where we have this doji and we start to take off at 496, the top of that is 576, nearly 100 points, the top of that 15-minute candle. From here, you're looking at a breakout, but 597, and it pulls back to 528. That would blow your account. You finally get a takeoff, and if you're in intraday drawdown, you're starting to really move, thinking, hey, I'm looking to sell probably at 715, gets to 692, falls all the way back to 637. If you're on intraday and under $4,500 on Apex, well, you just lost a ton of buffer on that. So you can see even at the 15, it's pretty tough. At the 5, it's also, it can be just as tough here. We break down to the 5. You can see we have a little bit dip on the open. We start to break out. It's looking really good, but then we pull all the way back. It starts to look really good. We pull back halfway. We start to get that breakout here. It pulls back even more before it finally goes later in the morning. Now, I wasn't even that far, right? I was more dangerously playing on the 1 minute. And the 1 minute can work actually very well. I did not believe that for a long time. I always said, and listen to everyone else, there's a lot of noise. What looks bullish really isn't. It's just on a really small time frame. But realistically, on the NQ, you can actually get a lot of movement. I mean, for instance, right here, 493, right? You look at 493 and you get right on up to 535. That's a great move. Where do you take your profit? I mean, you can say, well, I'll hit the EMA. If it falls under, I sell. I mean, there's a lot of things you can do, but look at just the choppiness of this market. Now, I did wait through all of this, but once I saw this breakout through the EMAs, I was excited. Now, I think I missed this initial move and it popped up without me. But then look at this. You get to the next candle at 938 and you're like, wow, this thing is really starting to go right back up. Like where the bears tried to push it down, they stopped just shy. Bulls are still in control. If we can break through this top wick, oftentimes you get a nice push to the upward side. So at 538, you want to go in. And as soon as you go in at 538, you're pulling back. You're pulling back to 515. Now, anything above one contract, that's quite a bit. So, okay, let's say you missed that trade because you don't like this candle. You want something with a little bit more confirmation. Well, this candle looks pretty darn good, right? You get the breakout here, and then immediately you get to 543, and then you're pulling all the way back to 510. 30 points, it's almost too big. If you try to hold through that, you're dipping all the way down here to this wick at 473. I mean, this just goes on and on and on and on. There just really was no momentum. There was a lot of 10, 15 point moves, but if you're a momentum trader, 10 points really isn't getting it going because your stop loss is always going to be probably greater than 10 points, at least in the first 15 minutes. It's a little different if you're at 1 o'clock in the afternoon and you're trading that sort of afternoon, slower, low volume hour. At 10 points, you can manage pretty well on a stop loss. In the morning, I kind of have a mental stop loss somewhere upwards of 25, 35 points, thinking that, if I get that far and it starts climbing back, I'm invalidated, I'll sell it for much shorter. But I do have to risk the idea that it might go farther. I don't have hard stops. I eventually do have a hard stop, but not initially when I get in. Maybe I need to change that. So I got chewed up yesterday. I did still I made a little bit of money in my PA accounts. I did have my initial loss here at 423, and then I got back in. But I lost one of the eval accounts. Day one, just boom, gone. So I have to reset that already. And I think I lost it on this wick right here. I believe, if I'm not mistaken, I got in on this break at above 536, pulled back, okay, survived that, started moving up, felt really good. I think I added, and I think this is where I really took my fall. I added here thinking this is the momentum push, right? We close well above EMA. We're going to go strong. I should have waited for a break maybe up here. And instead, we pull all the way back. And I think, okay, we're still safe. We're holding the EMAs. We start to pull up again. I'm feeling pretty good. And it went right through here so fast. I had an out at 507, but it was a mental out. And then it went through it. And I was like, oh, I don't know if I'm going to make it. I was like, if it goes, it keeps going, I'm going to be out. At one point, it was just like, well, I didn't have my stop in, so now I just have to survive this candle, and I never survived it, and I had to move on and take a new trade for the day without the evals. Okay, so how could I have played this differently? Let's look at the 5-minute candle, wherever it went, and let's say we're only going to play first the 5. Let's see if there's anything on the first 5 minutes. There's 9:30. We'll run this one as white. Okay. So here we're in between the EMAs. I don't like that. I really don't like playing in between the EMAs. I never know what happens. It usually chops. And even though it's slowly moving up, it is chopping. So let's jump up to the 15 and say, well, because it was in between the EMAs and there wasn't a breakout yet, and at this point, I'm still thinking there's a good chance this thing is going to just have a mean reversion all the way back down. We'll wait. Now, the 15 looks really dirty. That is a indifferent candle if I've ever seen one, but it still closes on the bullish side. So in the 15, we need to see a nice breakout, which we do here at the 9:45 hour. If now we jump down to the 5, based off that 15, let's see if we can see a good entry. So here we close above, that is good. We start making a move higher, but it's quite the indifference candle. Now, you could go in on the candle that closes here at 579, but where's your stop at? Currently, your stop is all the way down here at 461, or at least halfway down, or the EMAs. It's kind of arbitrary. So I'd say hold off on this candle. We move down, we push up. We move down, we push up. That looks good. Now what we want is we want to see the bears attempt one candle down with a close and find out how far they can go so we can get rid of the 465 stop, right? You want to be a little bit below the last red candle. Right now, we've moved our way up to 537. Okay, so that's as far as the bears can go is 543. We go just below, takes care of these 3 wicks here. And now we're going to wait potentially for either a break back above the 15, which you get here, or you can go here at 616. If you choose 616 to be more conservative, you do have a 539, which is far too many. That's over 70 points, so we can't go there. If you choose here on the close and say, okay, well, we closed above, that's 570, that's 540. So 540 to 570, that's 30 points. This may have been the best trade of the day right here. So your stop would be about 534. And you would say, well, entry is anywhere if I can just close above here. Now, we'll say we'll give it some room. Let's say you go in at 571. So 44, 54, 64. So just over 30 points, which is quite a bit. On the 150K account, one contract, that's $600. It's not going to destroy your account, but it's a mental hit if it hits. Now you've got to get at least 30 points to make this trade worth it, so we have to hit at least 600. We do hit 600, and we keep on going. Now, is there a different setup? If you take the break here, right? Now we get up here. We still haven't closed above this wick yet. If you're looking for a close above the wick, it's not till up here. At that point, you're pretty far back. At this point, you have to wait again, and you have to wait for a new pullback. So if you're trading on the 5, you skip all these, you get your pullback. I don't think we're going to make this one. So this is a perfect flag, right? We've touched the resistance here, broken into it, held it, not gone any lower. We break through. And now what I like to do is I never like to go in on the close. I like to let it open, preferably dip a little bit, Like if it can dip only about halfway down the candle, that's usually my favorite. And then I like to come back up. So this would have been my entry, which we did not do just yet. So I would have been saved on this one. But if you did go in on the close, that's 629 to 586. You wouldn't have made the bottom. And this is where you can begin to justify it. Once you're here, you know the bottom is at 574. So you are waiting for some type of pullback to eliminate the deep risk so that you can move it up. And again, you're going for momentum. You're not going for small 5-10 points. So when you get stopped out, you should get stopped out fast. If you don't get stopped out, that's because you have the momentum behind you. So this trade is a no-go because we never touched it. So we can now move our flag a little bit more over here. So now we have our red candle pullback. We know we're still bullish. We're respecting the EMAs. We're looking for that break above. Now, if we get that break above, we can go in at 633, and our current risk right now is 587. That's 50 points. We wouldn't be able to do that one. What we can do, though, is we can say that this candle opened bullish. This candle only went to the opening of that candle. So you could go 602. And being that it's bullish, you could attempt, right? In order to mitigate risk and go for momentum, you could say 625 above this candle is your break. Now you are risking chop. You're risking the idea that you've had 1, 2, 3, 4, potentially 5 candles that just don't go anywhere. The only thing you can say is you have a low, a higher low, slightly higher low, and definitely a higher low. So here, to be responsible, I'd have to put my loss my stop loss just below 600. And then my entry 627, right? Now we're looking at about 500. It's a little better than this trade. And then we're going to go for the highs first, 671. So 627 to 671, that's a great trade. You're out. At this point, it's 11 o'clock and I'm done for the day. That's on the 5-minute. Now, notice the pattern was each time I was waiting for risk to be in my favor before I took the trade. Whereas yesterday, I really wasn't doing that. I was really just going off of the momentum and not wanting to miss out. And that's how I ended up losing an eval account. So if we go over here to now the 15, we're going to go to the 30. All right, this is really popular by Brandon Trades. He does love the 30-minute. I've done some back testing on that, and I will say minus when I used to take more note of him at the time when I was really learning a bunch, he was very big on Fibonacci's, and I think he still is. I mean, I think at one point he may have traded primarily based on Fibonacci. I could be wrong. I haven't seen a lot of his videos. He's a pretty all right guy, and he's been around for a long time. He trades live every day. I always enjoyed his videos, but he does love the 30-minute. He likes the 30-minute break. He finds that this is got the highest risk-reward ratio. So I don't know exactly his process for entry, but I would say you want to break out of the 30-minute here, right? That means we would have missed this whole trade here. We have the breakout. We're coming back. We're retesting it. We don't even hit the 15 opening range break. We come back up. Now, here again, you've got the close. This looks really good for a flag initially, because now your flag's here. You're thinking, hey, this is great. Let's go in on the break. Now, some like to go above the wick, but I feel like it's waiting too long. So once again, I would have been looking right here, and we're not seeing it. We're back in the same place. We're just right back to the same trade now. So in the 30-minute, we would have missed the first trade. We would have grabbed the second trade. If I go to the 1 minute, there was about 5 more trades to take, and almost none of them worked, and some of them did. And unless you're really doing 10-point stops, this gets really incredibly difficult to trade the one on days like this. Lately, I will say that there has not been great momentum in the morning. There is eventually, but I feel like there's a lot of false breakouts that turn into chop. There's what Jerome will call barcoding. Just up and down within its same small range. And every time you think you're going to get a break, even though it looks like from EMAs, it looks like the trend, you got it, it just doesn't go. So patience, right? Just go patient. If you're feeling nervous, if you're feeling hesitant, if you're feeling like you just can't figure out direction, then focus on first 5 15-minute candles versus 1 or 2-minute candles. And with that will come typically larger stops, so you will not likely find as many trades. So in order to find an appropriate stop for your sizing, all right, if you're an MNQ, this is a very different situation. But if you're trading multiple contracts, even this all goes out the window. I think if you're on the 150K accounts like I am, trading one contract, 25 points is still not a lot. And so it prohibits you from taking a lot of trades and potentially saving yourself a lot of busted accounts. Now, on the flip side of that, you might miss a lot of trades too, because initially the risk looks high, the volatility is high, so the risk is high. But because the volatility is high, sometimes that momentum is there and you say, oh, that was a 45-point stop, so I didn't take it, but now it just went up 120 points, and then you get fear. Just never fear, right? I'll tell you, trading nearly a month with like 23 straight green days in a row without having a red day or losing any accounts or anything like that, my days felt normal. It felt like a job. Then losing one eval account, it just felt a little soul crushing. It's like, what am I doing? Right? And that's also how I felt on my bad days. So with that, I feel like it's getting long. I'm 21 minutes in. I'm not even going to really do a setup today, just because every day this week, wherever I've been in the morning at 6 or 7, it has been wildly different by the time we get into the day. Like yesterday, I thought it was going to be all shorts, and it was pretty much longs and a consolidation. But I can just tell you right now, we're trading at least within range and within value areas and around point of control. So not a whole lot going on anyways. Again, just today, I think I'm going to be more patient. I'm just going to wait for that 5 or 15, even 30-minute break and a retest. And based off of the risk is going to be how I enter. And then I'm just going to hit at least 1-to-1, ideally more, but I'll target it minimally 1-to-1, and that will be my day. Good luck to you. I hope you have a good day. I hope you didn't get chewed up yesterday, and let's have another green week.